honestly. So asking queries is not an issue. But before I respond to your queries, just a quick check. Amar, Aisha, Bakhtawar, Anas, Rafe, Zainab. How's exam preparation going? It's like 10 days to the exam. How's exam preparation going? One is like normal, great. What about others? Good to hear this, Bakhtawar. Uh, Amar, I understand we heard word on these lines. Rafe, in addition to revision, please may keep a good momentum towards revision of notes as well, please. Sorry, practicing the questions as well. Zainab, that's good. Just a similar advice to you. In addition to revision, keep a good focus towards practicing the questions now. Yeah, Bakhtawar. So to everyone, and based on Bakhtawar point, Bakhtawar raised a very good point, time management. With respect to time management, uh, to everyone, time management is important. Attempting complete paper is important, but attempting complete paper uh, should not be at the cost of compromising the quality of the paper. So maybe what I'm trying to say is, if you are uh, attempting 75 marks with good quality, with good concentration, is better to attempt 100 marks with losing the concentration. Like what you are writing, you don't know. But let's say you did 50 marks at your best. Like you said, Bakhtawar, I take your words, 50 marks question takes insane time. To some extent, I agree on this. And it's not like, if you notice, no, I'm running very short of time. So to attempt all questions, you distort all of the questions. Please, no. Question paper completing is important, but it should not be at the cost of quality. Quality should not be compromised. So that's a one-liner message, very important message. Amma, good to hear this. Rafe, the answer is yes. So whether it's section B or section A, we will be working for 24-25 unless specified. And Bakhtawar, yes, again, you are right. And that's the important thing in your practical life as well. Like in practical life, I can tell you, let's say if be it's financial reporting, be it's tax, be it's audit, we have to pick the clues from the general conversation or the general discussion. So that's the closer touch to the that's the closer touch to the practicality, the ACCA exams. Mm, by the way, guys, to everyone, I hope you guys have a good understanding of how to attempt a paper now, how the platform looks like, how to attempt a question on the platform, be it section A or section B, be it 50-mark question or 25-mark question, based on our previous 3, 4, or 5 sessions which we conducted for practicing the exams. I hope it would be helpful. Today, tomorrow, my main plan is to attempt any of the ATX exam paper completely, be it in the meanwhile, can I request everyone to please log into your ACCA practice platform? In the meanwhile, I'm looking for some of the questions Rafe is asking, Amar is going to ask, and any other obviously wants to ask. Rafe, sir, for corporation tax company year will be 1st Jan to 31st December, 1st April to 31st March. These dates are making uncomfortable. So it can be any date. If the date is any one other than year ending 31st March, that accounting period would be referred as a straddling year. Conceptually, straddling year has implications. Mathematically, if you ask me, considering Finance Act 24 versus Finance Act 23, there are no implications mathematically. So that's a quick feedback on this. Mm, so, Rafe, to precise and to conclude, maybe for you, for exam perspective, for question perspective, it makes no difference. Let's make it simple. Amma, you want to ask some questions? Yes, please go ahead. Please go ahead. Anyone wants to ask any question? So in the 7-year accumulation in the IST, I have to take both CLT and PET. Sorry, Amar, the answer is for lifetime transfers. The answer is no. So, okay. Thank you, Anas and Aisha, for raising. Just a sec. So, Anas, if you are talking about uh, lifetime tax of CLT, then PET will be ignored. And for death tax, uh, if within last 7 years there is any PET in addition to CLT, that will be considered normally. Anas, problem in capital goods scheme. I'm confused also. Capital goods scheme is tricky. So, in fact, interestingly, before joining this class, I was by chance looking at the WhatsApp group, and I just noticed that one of your fellow raised the question on the similar lines, the capital goods scheme. So, capital goods scheme, point number one, is applicable on the business which is making partially taxable, partially exempt supply. Okay. Mm, oh, it was you, Anas. Sorry. That's great. So capital goods scheme is applicable on the businesses which makes partially taxable and partially exempt supplies. Okay. Um, point number one. Point number two, it is applicable on purchase of building, which is like more than 250,000, and purchase of computer equipment, including overall more than 50,000. For computer, we have to make 5 annual adjustments. I'm not going into more like I try to keep it high level. For computer, we are supposed to make 5 adjustments every 5 year. We will recheck whether we are supposed to pay further VAT to tax authorities or whether we are supposed to take a refund from tax authorities. In the similar way, if it's a building, then we are supposed to make 10 annual adjustments, or we can say it as 10 intervals. If, last thing, if computer equipment or building is disposed of within 5 or 10 years respectively, then in addition to normal annual adjustment, we have to make a disposal adjustment as well. So this is a high level. I wonder that if to be honest, Anas, I wonder if I open up the exam kit, probably due to the questions or the queries from the overall exam kit, we will lose the today's question. But uh, mm, so for Anas' question, the VAT capital goods scheme, maybe this is what you are referring. I registered for the purpose of VAT from that date. Okay. I have now decided to use some of the insurance proceeds to have a new building constructed. The construction of Yak building, the cost 335 includes. So 335 minus 75. Mm,
Mami, saya dia ada tabungan dengan dia. Look that.
um, Shares, poll limited. I'm looking where this relevant information is. Become tax advisor to Jack. Insurance available. Amar, the answer is yes. And for that point, the answer is yes. Yeah, I am here, Anas. When carrying out this task 3, you should assume that the alternative plan for the use of GAG building is followed. I can confirm that supplies to be made to JAG unincorporated business will be wholly standard rated for VAT purposes. However, due to application of capital goods scheme, JAG's ability to recover the full 67,000 of input tax over the life of the building will be restricted until he opts to tax the building. Calculate the maximum amount of additional input tax which Jack could recover if he were to elect opt to tax the Yak building on 1st April 26. Your calculation should indicate the years in which input tax would be recovered. So every year, he need to consider how much he can recover, how much he cannot recover. Now, if I look towards, okay. And if he opted to tax the building, then he can recover the complete amount of input tax without making any annual adjustments or without the application of capital goods scheme. Okay. Alternate plan. So I can see there are two exhibits. Exhibit. Alternate plan for the use. I am considering the alternative plan for the use of the YAG building as follows. For a period of 4 years from 1st April, I would use 70% for the purpose of carrying on my unincorporated business, and I would rent out the remainder of the building from that date. Now, renting out the building, is it a taxable supply or exempt supply? It is an exempt supply, right? Unless you opt to tax the building. If you opt to tax the building, then it will become a taxable supply. Then in that situation, there will be no application of capital goods scheme, because if you opt to tax the building, it also becomes taxable. Your rest of the, let's say 70% of the use of the building is also taxable. Hence, complete asset, like you will no more be a partially exempt for the purpose of this building. But if you let out 30% of the building and do not opt to tax, then it means 70% of the building is used for exempt purposes, right? Hence, uh, the capital goods scheme would apply or would be applicable on the building. Okay. Uh, I do recall there were three ones who asked this. Anas, is it now a bit clear? Explanation, alternative plan of YAG building. Uh, Bakhtawar, Aisha Noor. Okay. For building, if I let out the building, is it a taxable supply or exempt supply? Anas, Amar, Aisha, Bakhtawar, anyone. It is an exempt supply, right? I use the building 70, like I will be using 70% of the building for my business purpose and will let out rest of the building. Okay. It means the building, 70% of the building will be used for taxable purpose and 30% of the building will be used for exempt purpose. Done. It means this asset is not completely used in business. Hence, on this building, capital goods scheme would apply. Is this explanation clear till here? Perfect, Anas. Now, it means capital goods scheme would apply if we proceed with the current. Amar, 70% of the building is used for own purposes, which is like taxable, and 30% of the building will be let out. Letting out the building is an exempt supply. Like I said earlier, capital goods scheme is applicable where business is doing partially exempt, partially taxable. Building, if let out, it will be 30% used for exempt purpose. Hence, capital goods scheme would apply. Okay. Is it now clear? I'm not going on the option, opting to option the tax, opting the tax. I'm not talking about that at the moment. Is it clear how the CGS applied? Anas, honestly, sorry, Amar, honestly, I'm not interested to go into the calculations. Uh, it's like I can tell you, till 4 years, there will be no, and I will perform the annual adjustment, but answer would remain the same because up till 4 years, there will be no change in the business use percentage. So 70% will be used for business purpose today. After 4 years, it till 4 years, it will remain same. And after 4 years, as per the plan, whole building will be used. So whole building means after 4 years, the business use now percentage would become 100%. So I will be recovering from HMRC. There will be input VAT from HMRC. Uh, Anas, now I got it. To be precise, this is your question because now I got your confusion. For a period of 4 years, I would use 70% of the YAC building for the purpose of carrying on my own unincorporated business, and I would rent out the remainder of the building from that date. By the end of 4 year period, my business would have grown sufficiently to require the use of the whole building. So till 4 years, I will make annual adjustment, but answer would be zero because there will be no change in taxable percentage now, taxable percentage at time of acquisition, right? But after 4 years, the taxable percentage now would become 100%. Original remains 70. So there will be for year 5, 6, 7, 8, 9, 10 for 6 years, like 5, 6, 7, 8, 9, 10. There will be input VAT every year. Bhaktawar, the answer is yes. If building is sold after 4 years, then multiply with the remaining period. So like the normal disposal adjustment multiplied by the remaining intervals. Right. Okay. So I have, uh, I need to also log in again. I logged out. Thanks, Bhaktawar, Anas. Aisha, so I have two options to be honest. One option maybe I it was just came into my mind earlier today. Not earlier today, like second half today, or in fact before the start of my TX class today, to be precise. I'm sharing my screen. I hope you can see the practice platform. If you look into the category, there is one more category which is like mock. Honestly, I missed to look this mock in the previous class. I assigned this mock paper as to me as well. And if I look, there is a short mock. Anything in the short mock? I doubt. No exam song. Now, if I go into my view assignments for advanced taxation, just a sec. So I have two papers to attempt with you guys. One paper is June 25. Yeah. One is June 25 and one is mock paper. what I personally suggest is, uh, can I ask everyone, is my voice clear or is my voice lagging? Clear? So there is no voice lag. So Bakhtavar, I can tell on your feedback, mock and June 25 would be same for you guys. Okay, so so if I ask you any one paper we can attempt today, tomorrow, which paper you guys want me to attempt? June 25 or mock exam? Okay. Uh, Fetumata, Amar, mock. You guys don't want the June. You guys want to do the mock. For June 25, I can tell answers would not be available. Like it's not available in the exam kit. So three votes for June, two votes for pre-mock, and some is still left. Now three equal of three. Arib, Madeline, Rafe, you three guys left. Quickly, four votes for June 25, five votes for June 25. Thank you. Who's left? Arib. So again, I'm following the democracy. And if you ask me, my own preference is also for the June. So if you ask, sir, is there any particular reason? To be honest, both papers will be new, fresh for me. Like the way you guys open the exam in your exam center, both papers will be similar for me, I promise. Then why you prefer June 25 over mock? Because I really want you guys to attempt mock, and the name mock matters. I want you guys to attempt mock, let's say 1 or 2 days before the exam, let's say 1st December type of date. I can share the answer with you of the mock. Uh, in the meanwhile, I try to search official on the ACCA website. Normally, ACCA provides the answer to us being tutors uh, for their such type of exam. So I can search, I can share the answers with you. But June 25, I doubt. So that's why my preference is towards my also preference, or I also prefer to attempt the June 25. But still, I want to hear. That's why I was taking polls. Thank you very much for supporting me during the poll. And let's start the June 25. So I'm going to start June 25. I'll attempt question one, the section A question today, and the section B questions of June 25 tomorrow. Okay, this will be the approach for today and tomorrow. Um, it's loading. I hope you guys are also logging in, right? I requested one thing earlier and requesting today also, at least do read once all of these instructions. Okay. If you are ready to begin your exam, please click yes. Are we ready to start our exam? Are we ready to start our exam? Perfect. Start. Um, you should assume that today's date is 1st August 2025. You are an ACCA student working for a firm of accountants. Your manager has asked to carry out some work in respect of two prospective clients, C and her husband T. Okay. C and her husband T. In addition to some ethical considerations which have been raised by your manager, advice is required in respect of determining an individual's tax resident status, chargeable gains realized by a taxpayer whilst overseas, the calculation and subsequent taxation of employment benefits, participation in company share option plan, whether to voluntarily register for the purpose of VAT, and tax allowable trading expense. The following exhibits available on the left-hand side of the screen provide information relevant to the question. C and T, memorandum from manager. C, chargeable gains and income, letter from C. T, unincorporated business, email from T. Work to be carried out, email from manager. This information should be used to answer the question requirement within your chosen response options. Before I start looking the exhibits, do you feel any type of ethical issue? One ethical issue which I am feeling. Again, like I said earlier, this question is exactly similar to me, like you guys open the question in your real exam. You never know what's inside. I also never know what's inside. So, but while reading the question till here, one inner feeling, gut feeling, which I'm having is till yet, ethical consideration. There will be something around, uh, conflict of interest type because we will be the tax advisor to Chol and we will be tax advisor to Tyrell. So potential conflict of interest. So maybe I'm just guessing. I really don't know. So that looks to me a more ethical issue. Amar, it could be possible you would be right, I would be wrong. I really don't know. Let's start reading this. Exhibit 1. Extract from a memorandum from your manager dated 1st August 25. This memorandum records the matters discussed in a conference call with C and T. They have been married for many years and are in process of becoming clients of our firm. C and T had always been UK tax resident until on 1st July 2023. They left the UK to go traveling. They have been traveling overseas continually since that date. Okay. On 1st November 25, they will return to the UK and become UK tax resident again. They will stay in the UK for the remainder of the tax year 25-26. November, December, Jan, Feb, March. So we are already talking about somewhat 155, 156 days, somewhat round calculation without any calculator, such that they will spend 156 in the UK this tax year. Wow. In the tax year 25-26, neither of them will have satisfied any of the UK ties prior to 1st November 25. In the tax year, neither of them will have satisfied any of the UK ties. Okay. On 1st November 25, C will commence employment with JDV Limited. JDV Limited is an existing client of our firm. Wow. Again, C and T do not own a house in the UK. From 1st November 25, they will either rent a property or live in a house which will be provided to C by JDV Limited. Amar, I'm not clear on your question or comment. So like I said in the start, exam is based on the tax year 24-25. But if examiner wants to ask any particular tax year, forward or backward, examiner can ask. Like we cannot say no, why are you asking? See the letter from Chol for information in respect of her asset sales in the tax year 25-26 and her employment contract with JDV Limited. Tyrell, on 1st December 25, Tyrell will begin trading as a sole trader. I have received an email from Tyrell setting out his plans. Exhibit 3. Letter from Joel, 1st August 25. They were back on 1st November 25, right? I set out below information. I set out below the information you requested. Asset sales. On 1st October 24, I purchased two paintings, a portrait for 26,000 and the landscape for 24,000. I sold the portrait on 1st June 25 for 45. I could sell the landscape now, 1st August 25 for 39, or wait until 1st May 26, when I would expect to be able to sell it for 51,000 at a major auction in the UK. I hope you guys can link or can sense the discussion. One option, sell it now, 1st August 25. By the way, both buildings purchased on, sorry, both paintings purchased on 1st August 24. And if I look into the original email, they left the UK on 1st July 23. For painting, for portrait, it was purchased after leaving the UK, sold before coming back to UK, exempt from UK CGT. For landscape, purchased after leaving the UK. If sold in August 25, that will be before coming back to UK, exempt from tax. If sold on 1st May 26, it will be after coming back to UK. We need to consider the temporarily non-resident concept, and maybe we need to pay the tax on this. Okay. But be mindful, this painting is sold on in May 26. May 26 means tax year 26-27. And tax year 26-27 means the tax to be paid on January 28, 31st January after fiscal year. Means you have a lot of time to pay the tax. On 1st July 25, I sold a vintage car for 89,000. I purchased this car for 54,000 on 1st Feb 23 and used it in our travels. Vintage car, whenever purchased, whenever sold, motor vehicles are exempt from capital gains tax. Hence, it is completely exempt from CGT. Employment contract with JDV Limited. My full-time employment contract with JDV Limited is for initial period of 3 years on a salary of 78,000 per year. This employment will be my only source of income. For the initial 3 year period of my employment contract, I can choose whether JDV Limited will provide either two cars or the use of an unfurnished house. JDV Limited has informed me that the annual taxable employment benefit in respect of two cars would be my car, Tyrell car. If these cars are not provided by JDV Limited, I will lease two cars privately at a total cost of 9,500 per year. Unfurnished house. JDV Limited purchased this house on 1st January to on 1st December 21 for 1.1 million. JDV Limited informed me that house has an annual value of 10,000 and will have a market value of 1,480,000 on 1st November 25. JDV Limited would charge me rent of 200 per month. If this house is not provided to me by JDV Limited, I will rent a house on the open market at a cost of 14,000 per year. Interesting. On 31st, on 1st May 26, I will become a member of JDV Limited Tax Advantaged Company Share Option Plan. I will be granted an option to purchase 1,400 ordinary shares at the current market value of £17 per share. I will exercise my options on 1st June 2029. I believe that the sale of the shares on the same day will not give rise to a chargeable gain. The exam isn't, but that according to. So, Amar, I would not say should be. I would say ideally the dates are in the period of 6th April to 5th April, right? So, but having said that, whatever the dates would be, no one is asking you to follow the tax rates of 25, 26, or like if I look into the last line, if it is June 29, tax rates of 29, 30, no. It mainly means that you have to follow or consider the tax rate and allowances of fiscal year 24, 25. So whatever the date is mentioned, that's the important thing. Any feedback, any comment before I start looking towards the sorry, got disconnected. Yes. So I was asking any feedback before I start looking towards exhibit 3. Maybe you are following the points the way I'm reading the question, because ideally you should be making your mind notes while reading the question. So if I look towards the exhibit 3, as you know, I will begin trading as a sole trader on 1st December 25. I set out below the information you requested. Anas, I hopefully it would not be. So at times we think more, but generally the things are not like that. So maybe I can sense for lease, maybe you are thinking more. It would not be like that. My maximum annual turnover is budgeted to be 60,000 and I will prepare accounts to 31st March each year. I have some non-business customers, but most of my sales will be to small businesses. You have already informed me that all of my sales will be standard rated for the purpose of VAT. You should not perhaps also be aware that I expect to purchase equipment and to incur other costs during November 25. Okay. So compulsory registration, I can sense it is not due. Voluntary can be done anytime. If there is plan to purchase equipment in November 25, and if you are not VAT registered, you will not be able to recover the input VAT in such situation. The input VAT which you incur on purchase of equipment will be directly expensed out. But if you registered from VAT, then you will be able to recover the input VAT. Yeah, that's correct. Um, the calculation of tax adjusted trading profit, product design. I first designed the product which I am about to start manufacturing in September 19, nearly 5 years ago. At that time, I paid a fee of 5,500 to design company to draw up the plans, but I did not go ahead with the production. Is this cost deductible? Like, can we deduct this particular cost? Uh, Anas, why not allow? And what's your perspective that like is your perspective of VAT? Is your perspective is of trading income? So I can tell if the perspective is of VAT, then yes, beyond 4 years cannot recover. But if the perspective is of trading income, which looks to me the perspective over here, then yes, you can recover. Business promotion. In December 25, I will travel by train to visit 6 potential retail customers in the UK. I will explain my product to them, take them out for lunch, and give each of them a high quality chef's knife which carries a large engraving of my business logo on the blade. I estimate that the total cost of this promotional activity will be 1800. I would particularly like to discuss two matters: registration for the purpose of VAT and tax deductions available in respect of the cost of designing the product and promoting the business. For promoting the business, since it's like entertainment, gifts to clients, not allowed. Very good. Maybe, not maybe, for sure. Last exhibit. Extract from an email from your manager. Please carry out the following work. Becoming tax advisors to C. C and T will attend meetings with us together and will each have access to all of the advice we provide. Consequently, I can confirm that there is no need for you to consider any possible confidentiality issues between them. Send me an email setting out the following. The behavior required of ACCA members in order to comply with the fundamental principles of objectivity and confidentiality. in relation to become tax advisors to see any potential threats to fundamental principles of objectivity and confidentiality and the safeguards which we should put in place. And if you notice the structure of the requirement, talk on the structure just a sec. C. Personal tax affairs. D. Prepare notes to be used in preparation for a meeting with C. Meeting notes in short, which addresses the following issues: tax residence, chargeable gains, employment contract. T. New unincorporated business. Prepare a memorandum for T. Client file, which addresses the following issue: registration for the purpose of VAT, tax allowable expenses. So if you notice over here, there are three formats which I am supposed to make everyone for the separate requirement. For A, email. For B, meeting notes. For C, memorandum for client file, right? So for every ABC, it will be separate. Okay. Respond to the instructions in the email from your manager. Split of marks is shown in Exhibit 4. Professional marks will be awarded for A, B, C, D things, 10 in total. Uh, any question before I proceed? Any question before I start the answer? Anyone? No? Okay. Uh, Let me take a look from here. So, Anas, indirectly it is mentioned 6 potential retail customers. So I will explain my product, lunch, chef, knife. So 6. So and that is how one of your fellow commented, like the cost is more than 50 gram. Sorry, not gram, 50 pound per customer. No worries. No worries, Anas. Mm, from tax associate to text manager, subject, first August 25. Bold, italic, underline, main heading. Now, if I look into this requirement, uh, send me an email setting out the following. Okay. The behavior required in order to comply with the fundamental principles of objectivity and confidentiality. So the first point which examiner wants me to talk about is fundamental principles. Within the fundamental principles, I will be once talking about objectivity, and once I will be talking about confidentiality. Objectivity. ACC, again, the behavior required from ACCA members. So based on the EPSM ethical updates I keep attending from ACCA. So I'm writing based on that knowledge. ACCA members should not disclose client information to sorry, ACCA members should advise clients by reference to what is best for their clients and should not be influenced by, for example, confidentiality. ACCA members should not disclose client information to third parties without client permission unless legally or professionally required to do so. Objectivity requirements, confidentiality requirements, the fundamental principle. Now, if I look further, in relation to become tax advisors to see any potential threats to fundamental principles of objectivity and confidentiality and the safeguards which should be put in place. Now, if I make a simple allocation, it will be like one liner, and maybe I need to write at least two lines for each of threat and safeguard, or make it for objectivity, one threat, one safeguard, for confidentiality, one threat, one safeguard. So this would be like the bare minimum which I need to adhere. Okay. Providing advice to C in respect of her employment contract with JDV would give rise to a conflict of interest as mm, sorry, there is some internet disruption. As JDV Limited is a client of the firm. A course of action which is most beneficial for C may not be advantageous for JDV Limited. This could threaten our ability to provide either or both of them with objective advice. Accordingly, now we identified the threats. Now we are talking about safeguards. Accordingly, if we wish to act for both CHLOE and JDV Limited, we should point out the potential conflict of interest to them and obtain their permission. In addition, we should consider having separate teams for each of them. So I identified the 2 points for threats and then 2 points for the starting 2 points for threats and then 2 points for the safeguards. In the similar way for confidentiality, I will follow the similar approach. Confidentiality. It is possible that information we hold in relation to CHLOE could be inadvertently revealed to JDV Limited. Again, so I identified the potential threat to the confidentiality. Now I'm advising the safeguard. Again, we should consider having separate teams responsible for each of them. And by the way, This was email. Sorry. I'm taking a pause. Any question from the ethical part? Perfect. Now I am moving to part B, personal tax affairs. Underline italic. It is notes for a meeting. So those interestingly who want to learn the formats, this question I can tell one of the best because in a single question, I never saw three formats. So I saw one format, two formats at max, but never ever three formats. Notes for a meeting. Uh, Notes for a meeting. Please prepare notes to be used in preparation of meeting with C. Okay. Notes for a meeting. So it's not like prepare notes and give it to. Prepare notes for a meeting with C to be used. We are not using it right now. To be used in future. What's the client name? Subject. Prepared by who was I? Text associate. Hmm. This is optional, which I'm going to do right now. These notes are to be used in preparation for a meeting with CHLOE. Tax residence. So what tax residence? I can confirm that C does not satisfy any of the automatic UK resident test or the automatic non-UK residents or the automatic UK resident test in relation to her only home being in the UK. Explain why C will become UK tax resident on 1st November 25. Mm, in the tax year 25, 26, sorry. Anas, yes, we'll talk about the TICE test element. In the tax year 25, 26, C will not satisfy the 183-day automatic UK tax resident test. Point number two. However, she will be automatically UK tax resident for this tax year because she will be working full time in the UK in tax year 25, 26. Consequently, she will become UK tax resident on 1st November 2025, the day she begins full-time employment in the UK. Further, further, based on home in UK since 1st November 2025. Either provided by JDV Limited or rent from open market. She will also be considered as UK resident since that date. Mm, Aisha, no. I cannot apply. Sorry. I cannot apply the residency test, unluckily. The reason being, I know that she is in the UK in tax year 25-26 for 156 days, right? Is it really mentioned about her previous tax year status? The answer is no. So that's the first reason I'm not very much able to comment. Second reason, if I look into the requirements again, I can confirm that she does not satisfy any of the automatic non-UK resident test or the automatic UK resident test. So he's like, throughout the year, none of the test is met. Explain why will become the UK tax resident. So that's why I'm like, since she is going to start her employment from that date, that's why she is tax resident. Otherwise, and since she is also getting house from 1st November, so based on these two, anyone would suffice. She would be considered as tax resident. Otherwise, no other reason. Sorry. Next, chargeable gains. When carrying out this work, you should ignore the possibility of C being subject to overseas tax. Explain whether or not the gains made by C on the sale of portrait painting and the vintage car will be subject to UK capital gains tax. So let's divide it into three parts. The first is gains subject to UK CGT with respect to uh, portrait and painting. Okay. Second, explain with supporting calculation. So this is the first instance where the examiner is like with supporting calculations, means here I need to make some calculations as well. Whether C should sell the landscape painting now for 39 or should wait until 1st May 26 when she will be living in the UK and will be able to sell it for 51. You should assume that C wishes to maximize her post-tax proceeds and that she will be basic rate taxpayer in tax year 25-26 and a higher rate taxpayer in 26-27. A total of 8 marks. Chargeable gains. In the chargeable gains, there are three things. One discussion is around gains subject to UK capital gains tax TGT. Mm, generally, gains are subject to UK CGT, where an individual is either tax resident in UK or only temporarily non-UK resident. In the tax year 25-26, she was temporarily non-UK resident before she was temporarily non-resident before becoming UK tax resident on 1st November 2025. And why I'm saying this? This is because she was UK tax resident for at least 4 out of 7 tax years. She was non-UK tax resident for less than 5 years. So first I concluded that she is a temporary non-resident, right? Once I concluded, once I concluded that she is temporary non-resident, then I'm going to have word about three of her assets. One is portrait painting. One is vintage car. And third one is landscape painting, where I need to discuss timing of sale as well, where I need to put the numerical analysis as well. Portrait painting. Despite C being temporarily non-UK tax resident, her gain on sale of the painting will not be subject to UK CGT. This is because she purchased and sold it while she was non-UK tax resident. Vintage cars. Cars are exempt assets for purpose of UK CGT. Accordingly, the profit on the sale of vintage car will not be subject to UK CGT. Um, any question till here? Thanks, Anas, Aisha. Anyone else? No. Okay, landscape painting. Timing of sale. So landscape painting, as we discussed, if painting is sold before coming back to UK, it will remain exempt. But if it is disposed of after coming back to UK, then there will be tax implications, right? So need to discuss accordingly and keep in mind the requirement element. The requirement element is explain whether C should sell the landscape painting now or should wait till until she will be living back in the UK and will be able to sell it for 51,000. You should assume that she wishes to maximize her post-tax proceeds and she will be basic rate taxpayer in the tax year 25-26 and a high rate taxpayer in tax year 26-27. So keep this in mind. Landscape painting. The gain on sale of the landscape painting will not be subject to UK CGT if it is sold before C returns to UK. This is because C will have both purchased and sold the painting while she was overseas. Accordingly, the post-tax sales proceeds would be 39,000. If the painting is sold after C has returned to UK, the gain would be subject to UK CGT at 20% as C would be a higher rate taxpayer in tax year 26-27. Refer working one on spreadsheet. Disposal proceeds, 51,000. Chargeable gain, this was purchased for 24. 51 minus 24. So the gain is like 27, right? Less annual exemption, taxable gains, CGT at the rate 20% amount. Post-tax proceeds about 46,200. So Aisha, I simply calculated the gain. Disposal proceed is like 51. 24,000 is the cost, like I have highlighted on exhibit 2. So I directly computed the gain basically, rather than calculating disposal proceed, cost, etc., etc. 46,200. In view of the above, C should sell the landscape painting after she has returned to the UK. Guys, just to share with you, they like any possible limitation of this advice. So the financial ground says the sale should be after coming back to UK, right? Is there any limitation or disclaimer to this working? Uh, Two comments. Comment number one. Today's selling price is more certain as compared to May 26. So we are talking about approximately a year after. I really not sure whether we will be able to achieve this selling price or not, you know. So that's one limitation. Second limitation, just for the sake of comment, tax rates could be changed by next year. So today we see the rate of tax to be 20. I really not sure whether the next year capital gains tax rate would become 30, let's suppose. In that situation, maybe auctioneer may charge some extra fee or hidden fee type of stuff. So at the moment, so I hope you understand. Like if you ask me any future analysis, so for future analysis, these are the uh, general comments I would say. like or a limitations to the future or forward looking workings, right? I hope you understand these particular pointers. What are the possible limitations? And if someone asks me, like, is there any other factor which you like to consider? Uh, maybe not a good, not good right now, because right now we are talking about exempt versus taxable. But if both are taxable, then second thing to consider from my side would be the time to pay the tax. But time to pay the tax matters when you are sure that you have to pay the tax. um, employment contract. By the way, before I start the employment contract piece, are you guys clear with the capital gains part? Are you guys clear with the capital gains part? Uh, Perfect. Employment contract. When carrying out this work, when carrying out this task, you should note that C annual income tax liability in respect of her salary is 18,632, and you should ignore any NICs. In order to assist C in deciding which of the two alternative methods to choose, calculate the financial cost for C, financial cost of each of benefits of a complete tax year to conclude on your findings. Complete tax year means ignore the timing like 6 months, 3 months, it will be available for these much months. No. Complete tax year means do consider the complete annual calculations. On the assumption that acquisition of company share option will not result in a tax liability and that value. Okay, so this explanation part is something else, but maybe I need to divide it into two parts. Employment contract. Mm, maybe I need to first talk about this. net financial benefit slash cost of the alternate benefits for a complete tax year. Mm, So I will be I will be putting all of my analysis towards the spreadsheet. Uh, I'll put the final comment here. And I hope you understand for a complete tax year meanings, right? Because I do recall she was about to join the employment on, she was about to join the employment on 1st November. But to conduct this analysis, we are not supposed to consider that she will be working only till from 1st November. So we need to consider the full tax year thing. Okay. Now, how to put the comparison? First, I should consider what will be my cost, etc., etc. If I go for option A, if I go for option B, what will be my cost, etc., etc. Okay. Like examiner said, if I reiterate, when carrying out this task, you should note that see annual income tax liability in respect of our salary is 18,632. You should ignore any NIC. In order to assist, calculate the financial cost of C for each of the benefits of complete tax year and conclude your findings. I need to conclude my findings as well. I'll talk about this later on. Okay. Now I'm putting it in a different way. So this is something which you and guys, this type of thing would always be in the exam where you need to think in a live environment how you want to present your calculations. This will be your decision, exam decision. So you cannot practice it before. You need to think how you should present it. So in my opinion, I am like car, house, what I can imagine. Income tax due to benefit. Mm, let me do it bit different way. If I go for the car option, if I go for the car option, what we call that as salary is 48, the cars, the unfurnished house, the cars, salary 78,000, car benefits. So just imagine both benefits are already provided to you. It is quite possible that you need to calculate it 10,400 and 7,800. Eighteen two hundred. As a result, if I look total income 96,200. After total income, I am like minus personal allowance, taxable income. On this taxable income tax rates, 37,700. Income tax liability with car benefit, right? Income tax on salary was uh, 18,632. Incremental tax on benefit. Is this incremental tax on benefit thing clear? Is this incremental tax on benefit thing clear? Anas, what to repeat? Like from where to repeat? Salary, car benefit, total, personal allowance, taxable, tax rates, income tax liability with car benefit is 25912. Income tax on salary given in question. Incremental tax on benefit is like 7280. I put a shortcut where I am like, if I were to calculate it directly, what it would be. Okay. So in short, Anas, we are calculating exact similar thing, but other way around. So we know what is tax on salary. In addition to salary, either there will be car benefit or accommodation benefit. So at the moment we are calculating if car benefit is there, what will be additional tax. So if car benefit is there, assuming no accommodation benefit, then the tax benefit will increase by tax expense will increase by 7280. Right. Second option was, yeah. So Bhaktawar, I hear you. And that's why I did not prefer to work this way shortcut method because I can foresee that aspect which you are talking about. And that's why I'm following this approach, like I always say, original what it should be, excluding what it should be, differential is the tax safe type of approach. If you like, generally the way we calculate tax saved due to loss adjustment type of stuff. If if this would not be the case, then probably I would have worked at it in this way, or at least demonstrated this. Unfurnished house. Salary. Accommodation benefit. All things should be on annualized basis, means no month apportionment. Remember, no month apportionment. Accommodation benefit, 1.1 million minus 75,000 multiplied by official rate of interest. Take care of the board mass, please. Expensive accommodation benefit. Accommodation benefit, what was the accommodation value? 10,000. Accommodation benefit, 10,000. After accommodation benefit, I am like less reimbursement. Reimbursements were like how much shoal per month, right? Why the lease amount in cars and rent? Thank you, Aisha, for raising this. So, Aisha, to be honest, a fair question. Can exam can examiner provide you excess or irrelevant information? Sweet and simple question. Can examiner provide you excess or irrelevant information? So it's basically you who need to decide what is relevant for me and what is not relevant for me. If you ask me, uh, in this case, like if my employer not provide me the car, then I need to take it on lease on which I need to pay 9,500 from employment income perspective. Have we ever discussed lease of car, implications of lease of car? The answer is no. We discussed the lease of car implications if employer is paying lease rental, where the discussion is if CO2 emission is more than 80, more than 50, XYZ implication, less than 50, ABC implication. No such thing towards the employment income. So this information stands irrelevant, right? Second, If my employer doesn't provide me the accommodation, then I need to look for some another one, and the another accommodation would have market value of, let's say, 14,000. Okay. Any implication of this 14 on the uh, accommodation benefit? The answer is no. So again, like I said, it's you need to decide what is relevant and what is irrelevant. If question asks calculation for exam, then we need calculation for examiner. So in the benefit calculation, it's not, these amounts are irrelevant, right? But maybe some other working which I can sense while attempting it, I will be needing them. And where I will need, I will let you know, obviously. So I will cover this statement in a note. Total income. Personal allowance. I hope you guys are okay with this working. You guys really don't need the explanation of this. $37,700. Uh-oh, tax looks to be hell a lot. Is the working till here correct? Like, are you fine? Can I have feedback from all, please? Thanks, Aisha, for the quick reward. Uh, Anas, thank you. Bakhtavar, Madeline, Arif, you three guys are clear? Thanks. And probably, Bakhtavar, you are referring to this point which I sensed earlier, like, the values from the values of the question, tapering of personal allowance. Thanks, Arif. Okay, now I'm going to conclude. The conclusion is around from a tax cost perspective, from a tax cost perspective, financial cost of each of benefits. Is there a financial benefit or is there a financial cost? So two benefits. One, car. Second one is accommodation. Additional tax on benefit. Car additional tax on car is additional tax on accommodation. So this is one of my costs, like I need to pay tax. Now here I am only concerning the financial, true financial costs and or benefit. So one is this one cost. Second, if I, let me talk about one. If I go for house, let's say accommodation, then in such situation, I need to pay rent to my employer. This is my cost, not benefit. Cost in car, there will be no rent payment to employer, right? But if you go to accommodation, then you need to pay annual cost of leasing car, 9,500. But if you go and there will be no lease cost in car. But if you go to car option rather than going for the accommodation, then you need to pay annual cost of renting the house. And in this manner, if I take what is the total cost if I go for car option, if I go for accommodation option. I am taking a pause for your feedback, for you guys to be done till here. Show the requirement, Anas. Yes, please. Why you add annual cost of leasing car of 9,500 in accommodation column? So Aisha, I am other way around. I put the annual cost of renting the house in the car column. Why is that so? So my perspective is, just imagine if I go to opt the car. Let's say if I'm C and I am to my employer, I want the car. Then what will be the consequence? Then I need to pay rentals. I need to pay extra income tax, which is 7280, right? Anas, for initial 3-year period, I can choose whether JDV Limited will provide either two cars or the use of an unfurnished house. It's not like you will get both the things. Now, coming back to Aisha on your point. So it's like if I opt for car, I will get the car, but then I need to pay the rent of accommodation from my pocket. So that's why I am considering the uh, rent over here. Okay. But if I go for accommodation, this is the extra tax I need to pay. Exactly. So that is the perspective. And again, I am considering only financial things now. Financial things as in actual cash inflows and outflows to me. It's clear? Now, if I ask you, did we ever make such type of calculation? I don't recall, honestly. But how to pursue this and in class, like in our live sessions, no, but throughout your exam kit, which you have attempted till yet, maybe still the answer is no. Is there anything technical which you are like, oh, sir, this is very technical. We are looking this calculation for the first time. The answer is no. Like that's pretty much, I would say, very hands-on calculation, income tax, car benefits, accommodation benefits. Aisha, I would not say confusing, but it's like the key art over here is to pick up the requirement and think a way to present, think a way to execute. And just guys, journal knowledge thing, this is very important for all of the this is very important for all of the text planning type questions. Like text planning type calculations, these are not technical. Honestly, these are not technical at all. But how you present it, how you execute it so that it becomes easy, That is a key art, understanding line by line the requirement. So she should choose the cars as this result in lower tax cost to her. Um, can I move to the next part of this, please? Company share option plan. Thank you. On the assumption that acquisition of company share option will not result in any tax liability and value of shares is increasing over time. Explain. Nothing to calculate, nothing. Explain the extent to which Joel's belief regarding the tax implication of selling shares is correct. Company share option plan. I need to revise. I will become a member of JDV Limited Tax Advantage Company Share Option Plan, CSOP. I will be granted an option to purchase 1400 ordinary shares of at a current market value of 17 per share. Current market value. I will exercise my option on 1st June 2029. I believe that a sale of my shares on the same day will not give rise to a chargeable gain. So Joel has stated that I will exercise my option on 1st June 2029. So first I put her comment. What is her main comment which I need to address? So this is the main comment which I need to address in this part of the requirement, right? Now I'm going to make comments around these particular lines. The first comment. This statement is incorrect. Second, see base cost in the shares for the purpose of CGT will be the amount she paid for them and how much she is paying. She is paying 1400 multiply by 17. $23,800. Anas, I will cover this line for sure. Together with any amount together with any amount chargeable to income tax in respect of acquisition of shares, which is nil under CSOP. The amount chargeable on acquisition will be nil because the exercise price to be paid by C will not be less than the market value of when options are granted. Accordingly, when the shares will be sold, C will realize a chargeable gain equal to the excess of sale proceeds over 23,800. So 2300 is like my cost. If she dispose of above this amount, that will be gain. The gain is reduced by any available amount of annual exempt amount will be subject to CGT at the rate of 20%. This is on the assumption that C will remain HRTP in the future. Business asset disposal relief will not be available as C owns less than 5% of share capital of JDV Limited. I'm done with all of this CSOP discussion. Unless we can mention the CSOP limit, but honestly, is it a question about limit or is it a question about treatment at time of disposal? So that there is no need to mention the limit. So if you notice, I try my best to keep. So in the first step, if you notice, I mentioned what will be the cost in the first, like after mentioning this statement, is it correct? In the first statement, I mentioned what will be the cost of shares. This point continued on the third bullet. On the fourth bullet, I am like, there will be gain based on amount paid versus the market value or the proceeds amount. Point fifth, I am like, CGT would be at the rate 20%. Point six, VADR would not be available. So I did not talk about conditions, uh, minimum tenor, etc., etc. I keep my discussions limited over here. Um, any further question? Thanks, Aisha. Thanks, Harib. Prepare a memorandum for the client file. Memorandum for the client file. Client name, subject, prepared by, date, again, the line which I'm going to write is optional. Either you write it or not write it, that is fine. This memorandum summarizes two matters relating to unincorporated I hope you guys can still hear me, right? I just realized like battery of my headphones are gone. So I connected the wire. Okay, registration for the purpose of VAT. Tile will not be required to register for VAT because his taxable supplies will not exceed 90,000 in a 12-month period. He can join, he can register voluntarily because he will be making taxable supplies. Explain why it would not be compulsory to register for VAT. So I explained why it would not be. Now maybe I need to uh, explain compulsory, but he could choose to do so voluntary. So this is what I explained, right? Explain the factor in relation to which will understand the financial advantage of registering voluntarily. Explain the factors due to VAT registration. Once Tyrell has registered, Tyrell would be able to recover all of his input tax because all of the supplies of his business will be standard rated. He would also be able to recover input tax incurred in respect of goods purchased for business purpose in the 4 year prior to registration, provided he still owns the relevant items and services purchased for business purpose in the 6 months prior to registration. Tyrell would have to charge 20% VAT on all of his sales. Tyrell's non-business customers and those business customers who are not VAT registered would not be able to recover this VAT. If Tyrell is unable to pass on to his customers the price increase resulting from the charging of VAT, the profitability of his business is likely to be reduced. I don't feel that part to be as such technical. That's why I'm not much commenting about that. But if anyone has any question from the VAT piece, please do let me know. So initially, first I explained like, is there a need for compulsory registration? Can Tyrell register voluntarily? Then output tax, input tax related financial advantages, disadvantages I discussed. Okay. Tax allowable expenditure. I can confirm that the chef knife, which are to be given to potential customers, are not items which will be sold by Tyrell in his trade. With that in mind, explain whether or not the product design cost and business promotion cost will be allowable when calculating Tyrell tax adjusted trading profit. So two things I need to comment about. Cost of designing the product, and second one is cost of promoting the design cost. One line feedback. Allowed, not allowed. Design cost. One line feedback. Is it allowed? Allowed. Right. Now I just need to articulate it. The design cost are allowable for the purpose of for the text purposes as they were prior to trade and would have been allowable expense if they had been incurred after he began trading. This cost will be treated as having been incurred on 1st December 2025, the first day of trading. Cost of promoting the business. In the cost of promoting the business, if I look into this carefully, there are three things within the business promotion heading. One, traveling cost. That one is the travel cost. Second, if you ask me, is the lunch type of cost, food cost, and third is the knife gift which he gave and for which we had a discussion like it's more than 50 pounds. So my this cost of promoting business would cover these 3 points in particular. Okay. Travel cost. If I ask one quick view, travel cost, is it allowed? Travel cost, is it allowed? Perfect. So I agree on the travel cost feedback. Second, lunch to the clients. Is it allowed? One liner. Yes, no, not allowed. That's it. Third, knife gift. Gifts generally allowed with two conditions, less than 50 and advertisement. Since it is more than 50, hence not allowed. I hope I'm clear. So I'll cover it in three lines or paragraphs, whatever you name it. The travel cost will be allowable for tax purposes in accordance with the above principles. Then the cost of buying lunch for prospective customers will be classified as entertaining, which is not allowable for tax purposes. Third, the proposed gifts conspicuous advertisement for tea business and not food or drink, etc. Accordingly, the cost of the gifts will be allowed will be allowable for tax purposes, provided each each one's cost is not more than 50. While reading the question, my perspective was different, but while I am writing and continuously reading it again and again, I realized one very interesting thing. I realized one very interesting thing. This 1800 is not for knife. This is for traveling, lunch, and knife all. Exactly. So I know that there are six clients to whom we are giving. That is like fine. But do we know what is the cost per unit, if I would say, like cost per expense? No, at the moment, I really don't know. So that's why I am like, this is something which we need to ask. We need to confirm from Tyrell. So I hope my this point is clear to all of you, because when I was reading the question, someone commented, and on that time I agreed with him or her, like total 1806 divided by looks to be more than 250. Fine. But when I read it now, my perspective got changed. And again, now I was reading again and again, importantly. Um, I'm done already. Um, Anything which is not clear in the question? Good to hear this, Aisha. Anas, and this is maybe like, the key element of the professional exams, to be honest. Questions, if you ask me, they're not as such tricky, but the way it is asked and to decide what to do, what not to do is the most important element, I would say, in the professional exams. So, guys, that's it for today from my side. Uh, Uh, Again, at times, normally you guys ask what will be the agenda for tomorrow. So I hope you guys are clear on the tomorrow agenda. And the agenda for tomorrow would be to attempt the section B questions of this particular paper. So that would be the agenda for tomorrow. In the meanwhile, if anyone has any question, please do let me know. Any query, anything on which anyone is not clear. I will upload the PDF of this file shortly in your drive so you guys can access it from the drive. We'll continue, inshallah, with the section B type questions of this paper tomorrow. Aisha, yes, from my side. Sorry, I just noticed your question. Yes, from my side, we are done. If anyone has any question, I can answer, but if no question, we are good to close for today. Yes, Anas, complete your statement. If on something capital allowance was claimed, then so Anas, to be honest, I'm smiling on your question. Answer to this is very sweet and simple. On which capital allowance claim would be tangible movable? Like obviously it would be plant machinery, it will be tangible movable, right? Right? Yes, no, right? Life more than 50, less than 50. Life more than 50, less than 50. In general, want me to again open the exam kit. Where to look for Anas? I am on Fox Limited. Can you please tell where I need to navigate? Rollover relief answer. Okay. No worries. Do drop me. I'll have a look at over there. No worries. You can unmute and ask if you want to. All right. Drop me a voice note on WhatsApp. I'll have a look and respond. No worries. Thank you. Madeline, anything you want to ask? Madeline, you there? No? Okay. Thank you very much. We'll see you guys tomorrow, inshallah. Take care. Faiz.